Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, we had a range-bound session today. Of course, we have the all-important Jackson Hole speech by the US Federal Reserve Chairperson Jerome Powell later in the night, in fact 7:30 India time. And of course, Street will be watching out for clues as to how much of a rate cut or whether or not there will be a rate cut in September or not. Of course, the voices are growing. I mean, there are expectations of a rate cut, but it's the quantum of the rate cut that is being debated as to whether it will be 25 basis points or 50 basis points. So all eyes will be on that, which is why I think it was a fairly range-bound session. We were treading water. If you look at the Nifty and Sensex, just about barely in the green. The Nifty, although good that it managed to defend that 24,800 mark. But looking at the broader end of the markets, Yatin, it was an underperformer today. Yeah. The midcap index was down 0.5%. Even the small cap index ended in the red. In terms of volatility, Yatin, the India VIX index surged somewhere around 5% or thereabouts. The advanced decline ratio, although it was even Stevens, but it was tilting in favor of losers. In fact, this Friday. Look at some of the sectoral movers, right? Autos, hands down, they were the top sectoral performer today. That was the only sector in the green. In fact, if you look at it, 1% gain coming in on the auto pack in a subdued market. Realty and IT were the top laggards in terms of sectoral movers. But banks as well, Yatin, the moves that we are witnessing, some positive moves that we witnessed, they aren't really sustainable. Today as well, the Nifty Bank Index ended the day in the red. In terms of gainers, auto names were obviously dominating. So Bajaj Auto was up 5%. I think the market cap is closing in on that 3 lakh crore rupee mark for Bajaj Auto. Coal India, Sun Pharma, Tata Motors, Airtel were some of the other gainers. On the flip side, IT names like Wipro, Infosys were among the losers, and so was ONGC. Divi's lab, of course, there are talks that it may exit Nifty in the half-yearly review. So that stock was under pressure. LTIMindtree and Asian Paints as well on the losing end. But I think lots of excitement, in terms of stock-specific action, right? There was a block deal in Tata Tech also, and Nykaa was also up 8% on the back of block deal. So lots happening, even though moves were subdued.
Even Ambuja, for that matter, and today Adani Group, and we discussed this yesterday in the show that Adani Group is all set to sell their stake in Ambuja Cements, and total 4,000 crores plus kind of realization for the Adani Group promoter entities. And probably that fund will be used to deleverage their own personal books. Obviously, Tata Technologies also saw a block deal of nearly 75-80 lakh shares, wherein private equity player Alpha TC is said to be the seller, according to sources. And Nykaa also saw a block deal happen in trade. So a lot of transactions post the result season. I think it's the season of block deals, wherein we saw a bit of consolidation. But Nandita, talking about stock-specific action in the mid-cap space, we had stocks like Philip Carbon Black, Himadri Chemicals, CDSL, all of these stocks moving 7-8% in trade. Some bit of profit taking in stocks like Deepak Nitrite, Lodha, Varak Engineering. So in general, there was mixed, 1:1 kind of a advanced decline ratio in the mid-cap space. Day of consolidation, but yes, we are inching closer towards the 25,000 mark, and the global cues, as Nandita was mentioning, the Jackson Hole commentary, whether or not September will be the month of rate cut is something which the markets will be keenly watching out for.
That's true. All eyes will be on that. Of course, Monday we'll be reacting to the speech by the US Federal Reserve. But let's take a look at the stocks that are on our radar this afternoon. On that note, of course, since autos were upbeat and were in top gear, I thought why not pick a stock from this particular space. So TVS Motor, that's the stock on my radar this afternoon. The stock hit a fresh record today. In fact, it is a multi-bagger auto stock which has doubled over the last 1 year. Today we had a UBS target upgrade coming in, and that has fired up the stock even more. So the stock price In fact, the stock price target is at 3,200 rupees, which implies an 18% upside from yesterday's close price. UBS is of the view that the new model, Jupiter, is a significant upgrade over its old models and peers in the industry, and it is offered at a similar price that the peers are offering for this for a similar product. In fact, UBS is saying that the Jupiter launch could aid volumes by 15 to 20,000 additional units. And the management, in fact, in an earlier chat with CNBC TV 18 had mentioned that the firm is expecting strong growth during the upcoming festive season, as well as it has predicted a 15% plus growth rate, surpassing the industry growth rate of 12% or industry growth anticipation of 12% or thereabouts. TVS, in fact, is expecting the scooter segment to grow and account for almost 40% of the overall two-wheeler sales. The company is, of course, ready to meet the evolving demands as well, and it is also expecting to launch a brand new, electric two-wheeler as well as an electric three-wheeler category in the next few months. So, all in all, of course, the commentary was pretty much positive. The management, when they last spoke, they had given very bullish commentary in terms of their business, and UBS, of course, very confident on this new launch, the Jupiter launch. And in fact, it has also said that the new launches will be a further catalyst for upgrade for the stock as well. In fact, even JP Morgan has upgraded the stock to overweight, and the target price is at somewhere around 3,050 rupees or thereabouts. EPS projection by JP Morgan has also been raised by 5 to 18%. As I mentioned, it is a multi-bagger auto stock. The stock has already doubled over the last 1 year, Yatin.
Absolutely. The stock of TVS Motors almost 2.5% higher in trade today after that new Jupiter launch, and obviously brokerage is now expecting that the volume contribution will be higher since the pricing has not been higher than the previous version. Now, moving from autos to healthcare, and Dr. Lal Pathlabs, that stock is in focus. Citi today has a sell rating with a target of 2,700, and obviously post the COVID times, most of these pathology lab stocks have been languishing in trade. Obviously, the profitability got impacted because of two reasons. One is the base of COVID, and obviously the volume that they got during that pandemic period, and also the predatory pricing of the newer players. Now, according to Citi's note and the interaction with Dr. Lal Pathlabs, the geographical expansion is something which will have a tailwind for the sector as well as for the company. But most importantly, there was competition in the marketplace which continues to be there, but the irrationality, the mispricing or the lower pricing of certain products have now been lowered. So there is competition, but the irrationality has gone. In fact, there is renewed focus toward international markets for Dr. Lal Pathlabs, especially in the Gulf region, and also the operating leverage could kick in since the volumes have of late picked up for the healthcare testing space. So, that's the story about Dr. Pathlabs. Obviously, there are a few IPOs also lined up. A few weeks back, Lupin management had indicated that they are also looking to hive off or probably get a strategic investor in their Pathlabs business, which they have recently launched. So the space is exciting, but yes, earnings tailwind is something that will be watched out for, especially for stocks like Dr. Lal Pathlabs.
All right, of course, diagnostic stocks in focus, particularly Lal Pathlabs. But another pocket that was in focus, Yatin, was the paint space, right? Because we have a new note coming from Nuvama, where it has given an anti-consensus buy on 3 of the paint companies. Of course, the mood around paint companies, wasn't all that upbeat, given the fact that we had some new entrants who were threatening to disrupt the markets, and the legacy players were actually feeling the heat. But that's really not the case anymore, according to Nuvama, because Nuvama has pointed out that the consumer response to new paint companies has been weak so far, and this despite the fact that the new entrants have been offering free tinting machines, superior dealer incentives as well, but all these have failed to really disrupt the market thus far. And Nuvama has categorically stated that it does not expect the new entrants to disrupt the market going forward. If you look at some of the commentary that is coming in from some of these paint makers on the stiff competition, Asian Paints has said that the new launch seems to have underperformed expectations. Berger has also said something similar. They've said that the initial enthusiasm over new entrants appears to be fading away, including among dealers. Kansai Nerolac also said that it has higher confidence in its ability to compete with the new entrants, which it had 6 months ago. Vis-a-vis 6 months ago, the confidence in tackling this competition is much higher right now. And Indigo Paints has also said that it has not really observed any kind of changes in the competitive landscape or pricing pressure as well. So all in all, of course, there was a lot of fear in the run-up to Birla Opus launch, that the entire market will be disrupted and, the legacy players will feel the heat. But that hasn't really, happened. And which is why the commentary now from these paint companies is pretty much confident as to how they can, go ahead and tackle this competition. Nuvama also said that paints industry is a double-digit volume growth industry, which is an $8 billion plus industry, and it has enough capacity to accommodate all of these new players, and they can all coexist happily as well along with legacy players. And in fact, for the legacy players, after the correction that the new entrant triggered in the stock prices, Nuvama believes that now valuations have become very attractive for some of these legacy players. And paint players are also expecting double-digit volume growth in FY25, and a rural uptick, of course, is something that could aid volumes for the paint makers. And recently we had paint companies also undertaking 1 to 2% hike, right, price hike. And if you look at the raw material prices, they are pretty much near 1-year lows, crude, etc. So things are looking better for the paint landscape. The competition worries, in fact, were really overstated. Correct. According to Nuvama. Stocks weren't really all that upbeat in today's session, but this outlook from Nuvama seems to be good, and who knows, we can see some colorful times ahead, or green on the screen for paint makers.
Probably, Nandita, is like a contra trade, on the paint industry, which is undergoing a competitive change. Big players like the Birla Group, which is operating under Birla Opus and JSW Paints, are in the marketplace. Probably, as somebody in Asian Paints mentioned from the management team, that the pie gets bigger, and it's not about the pie getting smaller for the players. Let's see how the paint industry does, especially in an environment when the crude prices are slightly softer than the last year's volatile levels.
Well then, those were all the stocks that were on our radar this afternoon. With that, we've come to the end of this edition of Closing Bell. Of course, crucial to watch the Fed's Jackson Hole speech later tonight, and we'll be reacting to that on Monday. We'll see you on Monday, of course. Have a great weekend and come back and join us again on Opening Bell on Monday. See you then. But for now, it's a goodbye from me and Yatin. Stay tuned to Moneycontrol for all your other news and updates.
Thank you.